The recent arrests of 4 Rio Tinto executives in China, including Australian citizen Stern Hu, who is the company's top iron ore salesman in that country, has prompted widespread media attention. Here to discuss this issue and Australia's relationship with its largest trading partner, I'm joined by Morningstar Senior Equities Analyst Mark Taylor. Mark, thanks for joining us.
Thanks.
Mark, first of all, in your opinion, were these arrests in any way some form of political retribution for the failed deal between Chinalco and Rio Tinto, which is what is largely being inferred by the Australian press?
I don't really believe so. I think this is more about the Chinese central authorities trying to rein in their own steel mills who have been operating increasingly independently and frustrating the price negotiation process because there hasn't been a coherence from their side of the equation. So, no, I don't believe so. I'm sure the fact that Rio rebuffed Chinalco's offer made it easier for them to involve Rio in a negative sense, but I don't believe it's their primary motivation. I think they'd be far more interested in maintaining a good working relationship with one of their largest iron ore suppliers.
Will these arrests have any kind of detrimental effect on companies doing business in China, or is it business as usual?
It's probably business as usual. It highlights, without question, that there is sovereign risk in China and that it's not all plain sailing. It might make one or two executives think twice about how much business or money they're investing in China, but in reality I think it's probably overall going to be business as usual. It also might make one or two companies who perhaps had felt that they were going to be on the receiving end of Chinese funding for development of projects and so on, perhaps think twice about what they're getting into. You know, does having Chinese money in your company come with strings? So, yeah, it could influence one or two from that perspective as well.
How are these arrests affecting the annual iron ore contract price negotiations?
I don't believe they're affecting this year's because it's sort of ended in a quagmire, and what's happening is that prices have been agreed between the iron ore producers and the Japanese and the Taiwanese, but the Chinese still haven't accepted the price terms, and they've just agreed to pay the same price that the Japanese are paying on an interim basis. So there is no official agreement. But in the longer term, I think the fact that this activity has gone on, the arrest of Stern Hu, the sort of bringing in together all these Chinese steel mills, as I said before, I think it's an attempt by the central authority to rein in the freewheeling activities of some of the steel mills, and it might suggest that they're looking at concentrating the price-setting negotiations. So it might mean that you're going to see retention of a contract price system rather than what BHP was looking for, which was heading down towards an index-based system, which is a system where the price is set with reference to the spot price, and then a premium or otherwise is attached to that price based on the quality of your ore and how far away you are from the port of destination, so it takes account of the freight charges. That system would have been advantageous to Rio and BHP because we enjoy a geographical advantage in that we're closer to China than, say, the Brazilians are, so our ore is more attractive to the Chinese from that perspective. So they could have perhaps expected a better price, and maybe they won't get that now if we're going to stick with a contract system. Might be tougher negotiating too with one central authority.
Could you explain how the proposed joint venture between BHP and Rio in the Pilbara region would function?
Effectively function as an independent entity. It's 50-50 owned by BHP and Rio. Rio brought a greater value of assets to the table, but BHP is going to compensate them for that by paying a $5.8 billion fee. So they'll effectively have 50% over all of the assets. And what you'll see is a much smarter system of mining ore bodies, transporting that ore on very extensive rail networks, and so you'll see productivity increase quite dramatically. Costs could come down a bit, but both BHP and Rio will retain their their share of product and they'll market that independently. So while it will operate as one entity, the marketing of products will stay with the individual entities.
What would be the implications for China of this joint venture, which still faces the regulatory hurdle of approval from the European Commission?
Naturally, as a customer, you don't like to see your suppliers becoming too concentrated, and you've got limited choice of product. They won't like it, but in reality, I don't think it's that big a deal for them, because BHP and Rio will still be operating independently. There are other suppliers. I mean, Vale is the largest supplier. There are smaller ones as well. I think it'll just be business as usual. And I mean, they don't really have any great grounds to complain about it, because on the other side of the equation, they're a very concentrated market. It's one central authority that's dictating the terms, and it's going to be buying the product. So, Australian iron ore producers could be upset about the fact that they're just selling to one huge customer.
Following last month's acquisition by China's Minmetals of a swag of Oz Minerals assets, are we likely to see any M&A activity in the near term?
You'll definitely see them, but I've suspected that the Chinese investing and making acquisitions in smaller Australian companies, so second-tier companies, I think was probably an attempt to get maximum bang for their buck, in which their aim was to ensure that there was as much supply on market as possible, so that the price was suppressed and they pay a lower price for product. And I don't think that's necessarily worked very well for them. Problem is, when you buy second-tier assets, they're harder to ramp up. They're smaller. So I think the Chinalco move on Rio was an indication that they've decided to go for the quality larger end now, and instead of going for short-term gain, go for longer-term gain. So perhaps you might not get quite the same degree of enthusiasm on behalf of the Chinese for investing in smaller companies, but there's no question they'll continue to do so, but they'll also, I think, be looking for larger quality opportunities.
Mark, thanks for joining us.
No problem.